connect with Mahantesh Sabarad as well, who's joining in on the show. Hi Mahantesh, what's your view then as to how you're reading into Dr. Reddy's numbers? Let's get in a take. It was the profits that came in a little bit below the street was anticipating. The company has as well spoken about going forward, how they're going to be focusing on the Sputnik vaccine, saying that it's the launch of the vaccine today. How have you read into the financials?
So there are two things one should look at, apart from the results per se. One is that you have to look at what is going to happen forward. So the biggest statement that came from the company was related to the Sputnik vaccine, and that's the development that the market has been closely watching. So this statement that the company has given that Sputnik will get launched in a couple of months gives a little bit of confidence to the outlook for the company ahead. So that's number one. Number two, that you have to look forward to in terms of Dr. Reddy's performance has to come necessarily from what's the outlook in US. We have been knowing that US has had pricing pressure. There is a lot of pressure that came in the past from FDA. Going forward, post-COVID recovery growth that we will see in the US market is likely to be very strong. And that augurs really well for most pharma companies in our country, to some extent Dr. Reddy as well. So these two things, which is the rapid growth in the US market and the upcoming Sputnik launch, is going to help Dr. Reddy's performance going forward. I will not look at the result per se, that is the result of Q4 alone, to make the forecast future, because the forecast is dependent on these two things that I mentioned, the Sputnik virus and the US growth outlook. Both look quite positive for Dr. Reddy.
Mahantesh, is the decline in metals which only got triggered as of this week, is that to be bought into just yet, or do you think because of how overheated and steep the escalation in metal stock prices was, there is bound to be further correction?
Yes, there is bound to be corrections that we will witness, because commodity rally has been relentless for the past few months. So there will be profit-taking bouts that we will see. Today is perhaps one such profit-taking bout, but that doesn't take away the fact that the rally will still continue to happen. So you will find that there will be bouts of profit-taking when the stocks will fall down. One can, if you are into trading, one can get into these opportunities. But on a long-term sustained basis, we do see the rally continuing for a few more months. There are underlying fundamental reasons for that rally to continue. I did mention while answering on Dr. Reddy that there is strong growth that we are seeing post-COVID, particularly in the developed countries, particularly in China as well. This augurs really well for those Indian companies exposed to either these countries in terms of their sales, or exposed to in terms of their linkages to these countries.
Okay. Mahantesh, let's also understand your view as to how you're looking at the entire consumption space, given the kind of volume growth trajectory that we've seen, the kind of numbers that HUL, Britannia, etc. have delivered, even for that matter in Asian Paints, which is roaring in today's trading session. What's your outlook?
So generally speaking, touch wood, the growth for most of the FMCG companies in the Q4 has been good. Therefore, they have been able to post good results. And we had this fear of the commodity cost rally pushing their margins into lower trajectory, but that doesn't seem to have happened. They seem to have retained their pricing power even when the commodity cost push was there. Having said that, the outlook ahead for the quarter seems bleak, because we are going into stricter lockdowns. Most of the FMCG companies have this problem of global commodity prices pushing their costs up, whereas local demand factors remain quite subdued. This phenomena is going to continue furthermore as we progress into this quarter, the Q1 of the new fiscal year. And therefore, I believe that most of the most of these FMCG stocks will sort of moderate. The only good thing about these FMCG companies is that from an investor's point of view, they become good dividend plays even now. So for a really long-term outlook on FMCG, which is multi-year outlook, that outlook remains strong and robust. The near-term 1 quarter, 2 quarter outlook remains a little doubtful.
All right, that's the view coming in on the entire consumption basket. Just marking what's happening with the broader universe too this afternoon, given that we are seeing that pressure as well quite acute. Jindal Steel, NMDC, Adani Total Gas under pressure, Balrampur Chini as well as Spark, Apollo Tyres, Adani Transmission and GAIL. Naresh, let's get in your view on the charts. What's the view on the some of those metal names as well as the Adani group of stocks?
So on the metal names, we've been looking at, say, this correction to be coming in for quite some time. And finally, a good correction has come into the metal names. The only one which has seen a good correction is a Jindal Steel, which looks interesting to accumulate at 410 to 390 levels, wherein it has corrected well from the recent highs of 460, 480. And then again, we may look towards a pullback towards 450 on that one. Same way, a sale closer to 120 looks okay for a bounce back trade. The rest of the metal names have not really seen much of a correction like a Tata Steel or a JSW Steel. So JSW Steel actually saw a correction and recovered back very sharply. So the rest of the pack on the metal names is still away from a buying zone as well as from the selling zone. So no clear view on the rest of the metal pack. The only one which pops up is a Jindal Steel, which looks interesting. On the Adani Group names, this has been a one-way rally across the board for the last 1 year or so. We are seeing more of a pause in the whole group as such, and then maybe would see some action going into these names by month end when there is MSCI rejig, which would lead to some flows. But overall, no fresh trades in Adani Group also at this point of time.
See some of the earnings contenders as well. Look at how sharp the reaction on UPL and Asian Paints have been after their numbers. UPL has shot up about almost 9% in the futures right now, and a solid 8.5% move coming in when it comes to Asian Paints. Mahantesh, what is it that you made of Asian Paints earnings? The decorative segment also has performed well. One would think not, although all the uncertainties have only started to play out in the last 1 month, which has not been factored into the earnings. But very positive sounding management commentary regardless on the future too.
So I'm frankly quite surprised by the stock price move, not surprised really by the results posted by Asian Paints. They were, I would say, along the expected lines. The only bit of good news in that result is that the volume growth, underlying volume growth that they alluded to was quite robust. That tells you that they continue to have this volume growth story intact. You did mention that the recent past month has been a bit of a challenge. I therefore had mentioned in my earlier commentary that the Q1 of this year is going to be tough for most of the FMCG companies, including Asian Paints. We will not see a similar kind of volume growth trajectory going forward, and the cost push will also be coming in. You would have noticed that sequentially for Asian Paints, the margins have not moved quite sharply. We expect that correction to happen now in the subsequent quarter. So we would be a little cautious about Asian Paints in the near term. But like I said, the long-term story remains intact because the next spurt of growth for them is going to come post the monsoon, somewhere in that October-December period. And until then, probably the stock will remain flattish to trend a little down. Having said that, post-October, we should be looking at a stronger growth coming in from Asian Paints once again.